6.2% in apparent slow market conditions. My win rate over the past couple of days has been absolutely ridiculous, even on the Monday alone. And there are so many trades that I didn't take that I could have. In this video, I'm going to show you exactly what they are, my two trades, how you could have capitalized on them, and more importantly, even through so-called slow market conditions, if you have a dynamic strategy, you can take full advantage of these moves. Most traders don't know this, but the last run before we finish any quarter, and it's usually the last 2 to 3 weeks, like what we're seeing right now, there is so much more momentum and better trade quality. Now, we're currently going through a bit of a challenge in the community right now where I'm pushing the limits of the strategy per se, because naturally you have trades that are lower in risk, then you have trades that are higher in risk. So we try and mitigate and get a bit more of a balance. But because where the strategy is so accurate, even if every single one of your trades were higher in risk, the drawdown wouldn't be as much as what you think it is, which is why we're pushing those limits. And it just helps with trade frequency. So let me show you. So I've got Kiwi dollar, Euro yen, pound dollar, and pound yen. Now I've taken 2 trades within these, but there's other trades that meet the criteria that some of them I stayed out of. So first up, so Kiwi dollar, I'm going to call this one a loss. Best case scenario, you could have taken a break even, but you would have had to have been quick. So notice how we take out the high. You can see all the volume there. We start the run into looking at the bottom of this range. That would be the trade idea. This one fails. If we go down into the 15-minute time frame, again, much higher in risk play, but we are starting to trend lower. Technically, there was a trade here, but we're just going to focus on this. So we break our low, we break the structure, we have our trade within here, we get our entry candle on the 15 at pretty much, 12:30. You technically could have got in a little bit later there as well, but call this like 12:30, right? So I've put 1 a.m. here just to, I've got these timestamps on each one, just so you know roughly the time frame of entry. So again, this is Asian session trade tagged in. This is what I meant about best case scenario. If you were right here and you micromanaged it and we started to reverse, you could have taken a break even or a small loss, but I'm going to put this into the category as a loss because you would have had to have been there. And if you set it overnight and went to sleep, there's no way you could manage any of that, even for a small loss. So we'll call that -1. So right, we've started -1. We've then woken up. You're up London session if you're in the Europe time zone, and you start looking at Euro yen. And the reason why you start looking at that, because this was the watch list. So I'm going off of my exact watch list that I've prepared these trades ahead in advance. These are the ones that we were anticipating. So what we'll do, for those of you that are new, so you understand what I mean by that, is I will have a watch list ready for the week ahead, and we will map out ideas to, right, if price gets to here, if it gets to this value area, this is where the bigger players are going to step in. This is what we want to look at. It's exactly what we did. So with Euro yen, you can see here that there's the volume, bigger players have stepped in. We want to trade in these areas. What do we get? We get price tap that area, we start moving sideways, and then when we get into lower time frames, this was a higher in risk trade, we start to look for our setups, our criteria. Now this was naturally higher in risk just because of this run. So let me just delete that. So this run as a whole, this is a bit of a squeeze, very corrective, but we start to get the dropout, we get our structure, 7 a.m. into lower time frames. So this is more of an advanced entry, as you can see right here. And then we drop in. You got to be aggressive with management with these ones because they can reverse like really, really quickly. So this was a lovely 2.2. Go into the 15-minute time frame, you can see we start to reverse. The bullish signs of it is here. So when you're going to take these higher in risk trades, and there are loads of them, by the way. So like, I could literally go onto the charts every day. I'm telling you, with how good the Falcon system is, I could find you 2 to 3 trades per day. It's just what level of risk are they? And then when you start factoring in like your daily loss limit, etc., that's not the way that I built the system. But it's so fascinating to see how much flexibility that it does have. So when people say to me, Mark, I want to take more trades and I'm finding myself being more hesitant, that's because you're doing the building blocks. But as you become more skilled, if you want to be more aggressive and you're good at that and you're accurate, you can do that within the system. But there are pros and cons to everything, because then you could have golden handcuffs. Like, I personally wouldn't want to be taking 3 trades per day, because if that's the only way that I built my edge, and then the only way for me to be profitable was to do that, that would feel like golden handcuffs, because then I'm glued to the session all the time, no flexibility. And what I mean by that is that I can't get away with, like, let's say this was a loss. Let's go back to this trade. It's really important. Let's say I take this trade 7 a.m. because the other one wasn't in my time zone anyway, but I take that trade, that's a loss. The way this works is that I can't just be taking one trade per day. I have to allow probabilities to play out, which means that I'm probably going to move more towards 2 trades per day on minimum, right? Which means that I'm now looking for the next trade, because if I'm going high risk or higher in risk, that first one could easily be a loss. So imagine I start the day and I'm like, right, first trade, boom, loss. And I've got a 1 trade per day limit. Well, then guess what? I could do 5 losses every day, -5 for the week. So there are pros and cons to everything. The good side of it is, if it happens to be a win, could be a 7% win. So there's pros and cons to everything. That's what I want you to think about. Anyway, so -1, then you got your +2.2, moving on to pound dollar. So first trade, 11 a.m. So we're in Monday at this point. So we've got our trade on euro yen. Let's say we traded every time zone and I was up really late. I would go -1, 2.2. I'm still in the same day now and I'm on pound dollar. It's 11 a.m. and we got a 1 hour entry. Boom. This is your first trade. Now within that, you get the opportunity for your scaling, which a lot of people actually took this, which is at 1 p.m. So you get your 11 a.m. trade, which is on the 1 hour. And I've been quite conservative with this entry. It's just that I tend to not like to go lower than a 10 pip stop. So then you've got your second entry, which is at 1 p.m. on the break. Same thing again. So you've got your 3.2 as we started to reject. If I go into the 15-minute time frame, again, when you start to see the bullish pressure go in, you're likely going to either reverse the move of the range or you're going to see deeper corrections. So the whole point behind this is like, it's the closest thing to scalping of the strategy that you'll see. Very aggressive in and out. But you got to still trade in the right areas, because an area that you wouldn't trade in, which would... it would be like the highest version of the risk. So the scale would be too far the other way, would be like areas like this, right? We already know the chances of this. I mean, you could, if you really wanted to, and say, oh, you could potentially get a loss there if you was tagged in by the spread and taken out. So that could be a fair comment to make. However, just because we're going into higher in risk trades doesn't mean there's no value or there's no confluence. I'm not just jumping on and taking any rejection. But as you can see with those 2 trades, managing them very similar. You've got this scaling, which is about 1.6, and then you've got the 3.2 here. Really key. So what have we got? -1, you got your 2.2, then you got your 3.2, then you got your 1.6. So you see how this starts to add. You start looking into the 4, 5, 6% for the day. Now, when you see recoveries like this, if you're trading in an area of value, so notice how, look, you've got a lot of volume there. What do? We take a lot of that out. We start to recover. I could technically go into this one right here and say there's a trade in there, right? So not the best delivery of the price up, but the trade is here nevertheless, which chances are if you was tagged in as this come around, you'd probably be taken out for a break even, and it still went. So you kind of could call that a break even as well. But could you see how many trades there are? I've not even spoken about, by the way, the trade which is on the retest of this structure, which is right here. This is a riskier position on the break, which is at what? We're getting into Tuesday now, which 7:30, I would say, would be a fair assessment of that. Let's have a look at what that is. Right there. You'd have about 17 pip stop on the recovery. Yeah, about 3-1, I would say, in there as well. Lovely. Absolutely stunning. Now let's go to pound yen. So the trade that I took first and foremost was this one. So this was my higher in risk trade, 2.2, walked away with it. Now I'll go back to euro yen in a second because this shows this position. So what did we forecast? We forecasted that on GJ, we want to see this gap being taken out. You can go back to the webinars. This gap being taken out, tap into the high, and we're looking to play this range. Now, it doesn't mean just because price is going up, it's just going to keep doing this up and down and you sell here and you buy here and it's that easy. No, because you're managing it more aggressively. The good news is I don't need price to go from here to make money. That's the beautiful part of it. I only need a little sliver. I only need a slice looking at the next areas of volume. So what do we have? Price goes up, taps the high, beautiful work. We start taking out all of these highs and notice how, look, there's your gap. Price comes down, makes a new low. We then come back up, gap between here to here. This one takes out that little high. This is all in Falcon mechanics that we teach you step by step within the course, by the way. So you've got this high that takes out this high, and eventually that gap's not filled yet, has it? And what's price going to do? Create these structures that are going to create volume to take it out. We then take it out, and then we've taken out this gap, which was that high. And then what do? We come in, we stack, and then we drop. Repeatable. This happens over and over again. Now, what I did is I went into the 5-minute time frame because I was looking for an even better entry, but I set this one just in case, because when they stack right at the top, they can drop out very heavily. So this was a beautiful 4-to-1. Could have been even more aggressive with it. But you can see my stop above the highs. I was looking for an entry up here, but had this just in case. But at the same time, what was I looking at? I was looking at euro yen. So we go back to the same pair that I was referring to earlier. What do? Look at these gaps. How repeatable? How can you tell me this is not repeatable? All these gaps being taken out. This is where the volume is. High gets taken out. We come back in and we stack. So what's the difference? Well, that comes to trade quality. So if I'm looking at this at the same time, what do I want to trade? Do I want to short euro yen that's done a similar type of price behavior, where I can technically get in here or get in on the break, that price is expanding? Or do I want to take this that is very flat, easier to set my entry, can manage the stop better? It's got a bigger range that we're playing. Pound yen tends to have more volatility when it commits. It really, really does go. It's in the right session. So naturally, I'm going to gravitate towards pound yen. And I could have been wrong, but yet this one was absolutely bang on. So you got your 4% and your 2.2. So you got 6.2 right now. But if I'd taken all of them, I would have had loss, win, 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 and then win, right? And then break even potentially on that recovery one there as well, and a potential win there as well. So there's a lot of wins in there, but don't be fooled by that. There could have been 5 losses in a row. It just so happens these ones have been very, very favorable. So there's pros and cons to everything. Like when you start diving into higher in risk things, you could literally hammer 4, 5, 6 losses in a row, even though they've got a lot of potential. That's personally not the way that I would like to trade. So there is a middle ground in a way to do this, but again, I've got content coming for that. Like, you have to know how to stack. You have to know how to use, prior profits to then go into that. It's not as simple as just like, right, I'm going to take loads of high risk trades. But what it does demonstrate to me, I wouldn't really expect, even on the higher risk trades, 5 losses in a row. That would be like the extreme. But it's possible, and that's not the way that I would enjoy trading, where it's like, right, 2 trades per day. I'm taking, like 8 to, let's say, 10 trades per week, 40 trades a month. That's just not really the way that I would want to trade. It's not how I've ever built my consistency anyway. But it's definitely possible for those people that are a bit more aggressive. So I just wanted to demonstrate that to you. But the last thing I want to explain is trade frequency and mastering timeframes. So this is such a valuable lesson. If I'm showing you a trade, let's say on euro yen here on the 5-minute, and I'm taking a 5-minute trade, the 5-minute trade doesn't mean that it's less risky if I use the 1 hour time frame. The higher the time frame doesn't always mean less risk. It's about context. So this had more risk because of the context, not so much the time frame. Where if I go into something like this, like for like trade, if I talk about the 5-minute time frame, this was less riskier than this because context mattered. This had loads of gaps that could have been filled to tag the high. This wasn't trending whatsoever, right? We were just moving sideways. So this could be messy, this could be choppy. What's the difference between this trade right here at 7 a.m. versus this trade here at 6:15 or whatever? Same sort of time sessions, just a day apart. Well, this one has broken the high significantly. So this is where the value is. This one is more direct. So you can see this is the start of what a bearish trend actually looks like, versus this had the potential to be the trade, but it's got much more risk attached to it. So it wasn't the time frame that made one less riskier than the other. It was the context behind it. So it's the same with everything. So if I go to the pound dollar, for example, right, on the 1 hour time frame, beautiful. This 1 hour time frame was, I would rather always trade. So let me put this in perspective. I'm always going to want to trade with the highest possible time frame that I can to get the risk to reward that I want. But what is important? The positioning of the trade. So this one was beautiful because we had the 1 hour here, which is a time frame. It's a higher time frame than the 5, but then we've got volume. So we're trading in the right area and we have a better time frame. That's always going to be a win. That's always going to mitigate risk. And I think the problem is with a lot of systems and strategies, and I've never really gone into the type of depth that I have today, so this is an absolute gem. I don't think people understand the difference between their trades in terms of quality and risk. And I've not really gone too much into positioning today, but I wanted to demonstrate to you just how much we have, and I'm 100% going to be implementing more into my own frequency because we're doing so well. And this is in a slower market. Like we're not even in the full trend market yet, which is insane to me. So I'm really pleased with that. But I thought I'd share that with you. So there's a lot more to come, and I'm confident, even just based on what I'm looking at, there's going to be more and more trades. But I would keep it, if you are going to dive into this as a higher frequency, if you are a Falcon member as well, I would be looking at like 2 trades per day as your absolute maximum. But you can probably start to see now, sitting on my hands and not being in the market is actually better than what I originally thought. Because if you've got to take a lot of trades, well then you have to now trade every single day. So when you're going on holiday, you have to trade. When you're trying to work, you've got to trade. When you're working your 9-to-5 job and you take your first trade and it's a loss, and you're like, right, well, I've taken an aggressive loss. I now need to take another trade to potentially mitigate against that. And then you miss that trade. Can you see how just because there's higher returns and more money to be made, not everything is good? When you introduce something that's good, there's also going to be an opposing force. It's yin and yang. So really do factor that in. As some of you might know, I've been trading for 17 years, nearly 2 decades now. And I have been teaching for the past 8.5 years, thousands and thousands of students. And it has become so apparent to me that the reason why some people win and why some people don't is exactly what I've just shown you on the charts. They lack context. They ask the wrong questions. And because they don't learn how to layer their trades, what do? They skip levels, and they've got so many missing gaps in their performance, they never succeed. But they were very capable. They had all of the potential to do exactly what I'm doing on the charts and all of our successful funded traders. It's in the quality of your questions. If you don't get good right now, I don't care how you trade, if you are not good at asking questions, you will ask the wrong questions, you'll miss everything else in between, and that you will obsess over this rabbit hole of the more knowledge that I gain, the more successful I will be. You're in the wrong arena, and it will take you so much longer and more stress and more headache. Keep it simple. When you understand what I just showed you on the charts, you will have a repeatable system. You'll have something that is robust in any market condition, slow or fast. And with all that being said, I have a solution for you. For those of you that have been extremely curious as to, but how do they trade? How do you put all this together? For the first time ever, you can learn Falcon for free. The link's in the description. You can sign up and you're going to have access to a peek behind how we trade the markets. You're going to have a full Sunday market breakdown. This is me breaking down all the pairs for the week ahead, what I'm looking at, why I'm looking at it. You can go back and test it, see how the forecasts play out or don't play out. You're going to have a trade recap so you can understand my thought process of entry, execution, the whole 9 yards. And you'll also have access to a lesson on our Falcon Mechanics course. This is the step-by-step A to Z as to how we build a narrative, how we build a trade idea. This is the first time ever that you're going to get access to this. This is going to give you the insight, and that's going to give you the confidence. There's a reason why we have been here for such a long period of time, and why we've produced so much success is because everything is order and we have the whole pathway laid out for you.